Come on. Ticker NASDAQ NQ. Holy dumparooski. All right, let's see what's going on higher time frame. I think we're pretty bullish in pre-market wise. Let me actually look on. I'll go through every time frame. So hourly chart starting out, we're on an uptrend on the hourly chart. 15-minute chart, also on an uptrend ever since pretty much 3:30 in the morning. We had that reversal at 3:30. Now we're making higher highs, taking out a low. It looks like it took out that low. All right, let's first thing is first. I'm waiting for the 5 minutes on. I'll wait and mark out the first 5 minutes and see. We are above the 200 on the 5-minute chart. So for my Tradeify accounts, the rule is I'm not shorting below VWAP. I mean, I'm not shorting above VWAP, and I'm not longing below VWAP. So we're gonna wait for confirmations. Gonna be patient and take it from there. We got about, actually, let me check before I go anywhere else. First thing is first, news. I don't think we're probably gonna have any news today. Yeah, so no news today. Completely empty calendar. So that could be good or that could be bad. Hopefully we don't get chopped all morning long. We should get some pretty decent price action. I mean, it's not a bank holiday. I don't think it's a bank holiday, is it today? All right, buyers stepping in there. We got 1 minute left. I'm gonna go ahead and start marking out that low. I think that low is pretty much set right there. All right, let's see this. And then we'll go down to a different time frame and I'll start looking at the 1 minute chart. All right, there's that low. And then got 30 seconds left. I'll wait. Actually, I'll draw it, and then if it breaks that high, I'll just adjust it. But there's that high for the 5 minute right now. I don't think it's gonna break it. 10 seconds left. All right, and there's the high set. Now let's go. All right, now we'll be looking to see what happens here. If we can start getting buyers stepping in here. May want to go for those highs again. It looks like it wants to go for that high up there at, what, 923 level? Gonna be patient, gonna be smart. Just scalping. These are my scalping accounts. Break and retest. Let's see if we could get a break so I could get filled here just for a really quick scalp. Dang it. So you get buyers stepping in on this retest here quickly. Buyer stepping in, and let's break the high. There's the high, and there's the TP. All right, that was the first break and retest. Let's see if wow, perfect exit. Pretty much took out that high. I was looking at that break and retest to go for that high. Now that we took out that high, now we could, it's open from here on out. We could either dump or we can sweep another low maybe. On these kind of break and retest for me, I have to just be, oh, actually I may get a setup for my other accounts. Let's see, if I do, I'll take it. Let me switch actually, hold on, give me a second. Crap. Let me get this set up real quick. Alright, I switched to my other accounts real quick. I want to see if I can get a setup here. I'll switch back if this thing breaks, displaces, and start ripping up, then I'll switch back. But as of now, we're kind of dropping back inside this 5-minute range. I may get a setup here. If I don't, then it's fine. I'll just switch to my other accounts, but I just want to be ready. Looks like it wants to keep... Problem is we got view op right there. It's bouncing right off of view op, holding it as support. Pretty much tapped into that imbalance one more time. And then if you look on a higher time frame, we got, you know, look at that 5-minute chart. We're still pushing above. We're pretty much holding that 200 on the 5-minute chart as support. And then if you look on 15-minute chart, right? Even the 15-minute chart, we're still above the 200 on the 15-minute chart. So it took out this low down here and then just completely ripped to the upside. Yeah, if we break out of the if we break out of this high right here and displace, I'll switch to my other accounts. Because then I just won't get a setup for these accounts. Dun, dun, dun. What is this? Alright, do something, NASDAQ. Don't be... Oh, this thing better not chop today. Is it gonna... Question is now, is it gonna hold this 5-minute range as support? Or is it gonna break back inside? Usually what we see when we get the move to the upside, what it'll do for the 5-minute range, it'll break outside the 5-minute range, displace above the 5-minute range, pull back, hold the 5-minute range as support, and then continue ripping to the upside. As of now, it broke it, but it's having trouble holding it as support. Not enough buyers are stepping in here. Bullshit market. Why is it a bullshit market? Today, so far it's not moving bad. I mean, it's moving decently. It's not moving bad at all. We're getting moves. We're getting moves. There it is, breaking the high. Let's see if it displaces. Now, if it displaces... Held that 5 minute as support. That 5 minute is also paired with that pivot. You see right under that 5 minute, we got a pivot point right there. Crap. Bruh. Bruh. Hold on. Let me... I never see you take a trade. I just took a trade. I literally just took a trade. I took this breakout. I don't know if you'll be able to see my... Probably not. Hold on. I think my TikTok is set up so it's no. Because you can't see it. Well, you just have to trust me. I just took a trade on, where was it? This break. It broke out of this right here. It broke out. We had a candle closure. That break and retest. It came back, retested this as support, and it ripped for the highs, and I took profit at these highs right here. So now I switch to my other accounts after taking that trade because I may be getting a setup on these accounts. And then after I take a trade on these accounts, either I take a trade, I'll move to my other accounts, or I don't take a trade and I'll still move to my other accounts. But as of now, I'm still waiting to see what happens here. Whether it's going to displace above or it's going to break back inside this range. Problem is we got view op right there. So I'm going to be extra careful with this setup. Because it could hold view op as support. Looks like it's going to displace it. It keeps holding this 5 minute as support. Ugh, man. All right, this thing's got to do something. Come on. All right, there you go. There you go. All right. All right. Now, the best break and retest to do are going to be ones, for example, kind of like this one, right? This kind of break and retest is going to be one of the best ones to do when we're down here, right? So, idea is when you see these wicks right here, it forms these wicks right here. So a lot of sellers are stepping in. It breaks that. Not only is there now this turning into support, but there's also an imbalance there. So, right, we kind of go for those highs. We take out those highs, but then we retest that as support. I took mine a little up here just because I figured we're going to retest this area first to go for those highs. But it's a little dangerous taking the break and retest up here because, I mean, price could easily just have a pullback and then you're going to be caught in that pullback. So it's best to kind of wait for that pullback, wait for some structure to form, break out of that structure, and then hold it as support. Call it manipulation. I mean, this break and retests aren't manipulation. When you say manipulation, you're talking about like a sweep of a level, like what happened here. I mean, people call that manipulation. People call it whatever, liquidity grab. But break and retests aren't really manipulation. It's sellers trying to step in, right? And then buyers breaking out of it, more aggressive buyers. And then a lot of times when we pull back to that area, it'll hold it as support. Buyers will start to step in again. It's almost like if you were wanting to average in, let's say you were trying to buy into a $100 million position or a massive position, you wouldn't buy like a full position when you're trading massive size. You don't buy the full position at once. You scale into positions, right? So what they would do is they would buy at a certain area, right? Maybe it would go up. Then it would come back to the area, they would buy more. If it goes lower, maybe takes out a level, they would buy more. And it's just like you have to scale in. You can't, like the way we trade when we're just getting full size, they can't do that. So it makes sense why it does that. All right, this thing is just chopping right now. But, shouldn't you not be trading today? I mean, price is moving. I mean, we're getting a decent move. It's not, market's open. It depends. I mean, I don't think there's anything like a lot of traders. I don't think there's anything wrong with trading this market. It depends on you, right? I mean, it's as long as you understand what market you're in. As long as you understand the market and you're not trying to push out of, like, you're not trying to get out of the market what the market's not giving you. But if you understand it could be a choppy market, then you play that. You're not going to be greedy. You're going to take your profits quickly. You're not going to... So, it just depends on the strategy. If somebody has a strategy where they go for bigger profit targets and then, right? And what happens with people that trade that, they trade a day like today, right? Where, I mean, we could get chopped. It's very likely we could have a choppy market today. And what happens is they take a trade and they're expecting like a big move. They get stopped out and they're like, this is a shitty market. Why? This is BS. Like, no, I mean, it's just like the markets. I mean, it's a Friday. We just had Christmas yesterday. Tomorrow's another day off. So it's like, do you really think what's the probability wise? Could we get a big move? Yes, we could. Like the day before Christmas, we got a pretty decent sized move. But the probability wise, I don't think it's, I think it's less likely to happen. But market makers are sleeping. Yeah, I don't know if they're are the market makers even no, they're rolling. They're in there. We'll see if I get a setup on these. I mean, this is going to be a little bit, on these accounts, this setup right here is going to be a little bit lower probability just because view op is right there. So I'm just saying that beforehand. If I do get a setup, I'm going to size down on it. I'll still take it, but I'm betting on, like, I'm hoping for the break of view op, which it makes it lower probability when you do that. But you can see we're failing to displace. So now let's see if we start to go for those lows maybe. And then what I'll do is, let's say 20, so 60. So 60, let me do the math real quick. I'm not the best at math. Do 5 contracts at 60. I'm not gonna risk too much. I'm gonna do, as long as it doesn't take out that low. Now let's do this, and don't copy me if I get this set up. As long as it doesn't take out this low first. If it takes out the low, then it invalidates this short. As long as we don't take out that low, this is still valid. But once we take out that low, then it's invalidated. I'm gonna move to my other accounts. I really hope it doesn't take out that low first. Oh, come on. Get a little push up. Got my order in right there. Let's see if we... Now, this is lower probability a little bit because of VWAP. The only reason is because of VWAP. So, these are my other accounts, which... See what happens. I'm willing to take it, though. I'm willing to put the risk on the table. Well, we'll see it tap into this imbalance. Looks like it's going to tap into this imbalance. Hopefully, it doesn't just, like, edge me and then drop, but... Oh, come on, don't do that. Alright, we just pushed above VWAP, so it is lower probability. I'm gonna go ahead and set my stop loss right away, just in case it keeps pushing up. And then I'm just gonna go... Let's see. Probably TP down here again. Or actually, I'll do this. I'm not gonna be greedy. I really am not. I mean, it's gonna... I'm looking for just for that retrace back down to that. I don't want to be greedy because I just want to take my base hit for today. I know the market could be choppy, so I'm not willing to be chopped up in this market. Now we're trying to retest VWAP. Let's see what happens here. Is it going to break VWAP? If it breaks VWAP, it's looking really good. So far, it's having trouble holding VWAP, though. So we may get that break here. Come on, break it. Break it! There's the break. Continuation. Continuation. All right, sellers. I think sellers are going to keep pushing it down, at least to this level. At this point, we're below VWAP, so I just don't know if it's going to continue breaking down. I'm not willing to take the risk on possibly a choppy market, so I'm just going to take, you know, understanding the condition we're in and being careful. So let's see this tap into this level here. Come on, a little bit lower, bruh. A little bit lower, bruh. You got a little more room. No way they push it back above VWAP. No way. No way. No way. Bruh, why they gotta edge me like this? Why? Why don't they ever edge my stop loss? They're always edging my TP. Why? Explain this phenomenon. Come on, break it. Hurry up. Oh my gosh. You... Move TP. I don't want to be too greedy. I just don't. I understand what you're saying, that when this breaks, this is probably going to go for the low down here. There's TP. It's probably going to go for that low, but I just don't want to be greedy, and it's going to, you know, it's going to go and it's going to reverse right here. I don't want it. It's a ranging market. It's a choppy market. If we had maybe a regular session, and just based on my history, every freaking time I get greedy, I get absolutely destroyed. Every time I get greedy, I get destroyed. I don't know why that happens, but it's just, I can't be greedy. I really can't. Let's see what happens here. Let's see if this thing ends up going for those lows, or this thing starts reversing right here. I understand it could go for those lows. Most likely it will. It's below. It already broke view op, so there is now a higher probability it goes for those lows. That was the biggest barrier for this thing going lower, is that view op area. But move your stop loss to decent profit. Not greedy, just risk. I mean, here's the thing. I play what the market's giving me. So this is my whole idea behind you take what the market gives you. High probability. I typically like average out. Yes, sometimes my risk to reward is negative, but over the long run, I have some over 1-to-1 risk to rewards under, but over the long run, it pretty much evens out to a 1-to-1 risk to reward. So I take what the market gives me. I look at high probability, right? Based on my experience with NASDAQ, trading it for so long, I understand that a lot of times NASDAQ comes down, takes out not the wick, but the body candle low of that swing low, the body candle lows. It'll tap into it, and then it'll reverse to the upside. I've seen it happen so many times that I'm not willing to take that risk of it. And you see what it did now. I mean, now it took out that low. Now it's pushing right back up. So if I would have had my TP down at this low, I would have still been in this trade, now risking possibly this thing ripping all the way back up to the upside. So I just, my whole thing, what I preach, take what the market gives you. Don't be greedy. I mean, if your strategy shows you to get more out of a certain trade, then take it. Then take whatever your strategy is, but and that's just like me. That's me talking from getting wrecked so many times of getting like, even like having my TP at the swing low. I've had that before, where I've had my TP at the swing low, price comes down, taps into this body candle low here, and then just rips to the upside, and I get stopped out, and I'm like, shit. If I would have just taken profit at and not been greedy for that extra 10 points, I would have made money. So it's just what my data shows me. And you see how much trouble it's having getting down there. I mean, this is like an area where this thing could reverse right now. No, this isn't options. This is futures. Yeah. I used to trade options. Futures is better. You also got more opportunity for beginners in futures and pretty advanced. Like if whoever's pretty advanced, they got more opportunity there too. All right, let me move to my other accounts. Maybe I'll take another trade on my other accounts. Wait, what the heck? Oh, crap. I accidentally took that trade on my... Wait. Yeah, shit. I didn't even realize that. I took the trade on my other account on accident too. I didn't mean to do that, but I guess it worked out. Wow. All right. I guess that's good. All right, now we're going for those lows, it looks like. All right. Actually, let me make sure freaking... I gotta make sure all my orders are canceled before I exit out of those. Hit the flat. You gotta hit the flat null a couple times. It's like every time I'm about to switch accounts, I make sure to like smash that flatten all button like 3 or 4 times. All right. All right, now we're breaking. I may take a setup here on the Tradeify accounts. I don't know if it's worth it. I already took a... we'll see. It's a little bit... It would be risky taking a short here. Market blending? What the heck is market blending? I've never heard of that. Market is full of shit. It always does this. Yeah. It's you gotta realize, here's the thing, you gotta realize what the market does, right? It's like, you know, even with like what people what ICT traders call liquidity sweeps or whatever you want to call it, right? If you see the market take out lows and then rip to the upside, take out highs, rip to the downside, like, then stop. If you notice that, then position yourself to the point where maybe wait for that low to get taken out first and then take a trade. But people take a trade, they get stopped out, it sweeps that level, goes in their direction, and they're like, this market's rigged. This is all just, you know, this is all BS. But is it really BS? Like, realize what the market does and capitalize on that. Wait for that level to get swept and then take a trade, right? That automatically boosts your probability. Wait for certain confluences to happen. This is possibly a decent short right here, but the problem with this is like we're at a support level. So this thing just swept this low. So there's a low that got swept. If you look on the 15-minute chart, right? If you look on the 15-minute chart, this low right here, where that pivot point just got swept. So we could see buying pressure start to step in right there. So that's why I'm kind of like iffy about taking a short right there, because that low has already been swept. So this thing could just absolutely rip. Or this thing, or this thing retests, right? Retests that 5-minute and then goes lower. One of the two. Just made 17%. I'm tough. 17% is good. If you're trading options, I'm assuming you're trading options. Could you explain contracts and managing how many contracts you should and shouldn't place? Yeah, so the amount of contracts you should be taking is based off it's based off how your strategy, how much you're willing to risk per trade. Especially more advanced people could risk more contracts per trade because they're more confident, they got more experience. If you're the more of a beginner you are, the less contracts you should be risking, meaning position size. And if you're trading if you're trading prop firm accounts, if you got a $50,000 account and you got, let's say, $2,000 in drawdown, depending also on how many trades you want to take per day, if you're allowing yourself maybe 2 trades per day, maybe try it. If you're a beginner, maybe try to risk, you know, $100 maximum per trade, 2 trades max per day, maybe something like that. So maximum loss per day. If you're losing $200 a day, I mean, you got some wiggle room before you get to that $2,000 mark, right? But it really depends. Like I go aggressive because I'm a little, I mean, I've been doing this for a while, so I'm a little, like, I'm more confident than a beginner. So I'm able to risk more, and I'm, you know, sometimes I'll risk less, sometimes I'll risk more based on my confidence level, but that just, you gain that with experience. But it depends. It really depends on how much you want to be able. Here's the thing, you want to be able to go through drawdown. You don't want to just be blowing through prop firm accounts every single day, because that starts to add up. When you start spending $100 a day because you keep blowing prop firm accounts, that starts to add up, and that can really eat away. So just, you know, take it back, take it easy. You don't have to pass an account in one day. You know, allow yourself some room. If it breaks above 25,872, I'm going long. 25, what? 872. What I mean, you do what you, I think what would be a higher quality setup is if this thing right now, I mean, you do you, right? I mean, if you take a liquidity sweep, probably, but you could take it. I mean, if, you know, this could be a good risk to reward if, you know, it's swept that low. Maybe if this thing starts gaining momentum, but here's the problem. Here's the problem you run into. You got VWAP right there. You got VWAP right there, so understand that VWAP a lot of times hold as resistance. So this thing could push up to VWAP and hold it as resistance to continue going down. What some people do, and I mean, I'll take a trade. If this thing does this, then I will take a trade. If this thing pushes up, let's say it pushes up to VWAP, right? Pushes up to VWAP. VWAP is right under that 200, this gold line. If this price pushes up to VWAP, rejects VWAP, pushes back down, right? Regardless, takes out the low again or fails to take that low. It pulls back up. It breaks that high now. Now that resistance that it held at VWAP, it breaks it, displaces, pulls back to VWAP, holding as support. Now it's higher probability because you're above VWAP. It's gonna hold it as, it could hold it as support to continue going up. So in my eyes, that just becomes a lot higher probability setup than trying to take a long into VWAP. I mean, you could take a scalp, but what I'm just saying is understand that you got a lot of resistance right there to get through. Just made 100 on longs, nice. Bro, you had me scared. Why'd I have you scared? See, I was thinking about going short here, but again, that's just, I would personally just wait for a better setup. I mean, this could be a good setup, but we're just out of support. The fact that we swept a massive level that's the only thing that's scaring me, is we swept a massive level. Yeah, and the general rule of thumb, and this could actually save you a lot of money and save you, like, anytime, look at it this way. Anytime we're below VWAP, sellers are in control. Anytime we're above VWAP, buyers are in control. So if you if you had the rule of I only short below VWAP and I only long above VWAP, that actually puts you in such a better state. Obviously, it depends on your strategy. I'm saying this, I do have a strategy where I sometimes go against, but I understand for my other strategy, when I'm going against that, like when I'm trying to short or long below VWAP, I'm understanding that, and I'm taking profits quickly because I know I'm going against the grain, right? And when I'm above VWAP, I sometimes hold longer because I know I'm with momentum. But for my... What the heck? Give me a second. But what I was saying, for my other, the break and retest strategy that I use, for those accounts, strictly below VWAP, only short, above VWAP, only long. That's a strict rule on those accounts. What is VWAP? It's volume weighted average price. It's the most popular indicator that is used in the markets. Literally the most popular indicator. Hedge funds even use VWAP. So, it's just it's a really good indicator to have, not to take trades off of, Not to every time price goes to view up, you try to long or short, but have it as a gauge, right? Have it as a gauge in the market. When you're in a long and it's pushing up to view up, you're like, oh crap, I gotta be careful here because this thing could reject here. Just use it as a gauge in the market. And it is a gauge in the market. It's volume weighted average price. That's why a lot of times price chops at view up. When prices at view up, it could chop, right? It's just the average price. It's very balanced. When price is at view up, it is very balanced. All right, looks like that would have been a good short. Oh man. I was just scared about that sweep. I thought this thing could rip up, but looks like and this is what I talk about, break and retest, right? We have this level here. Look at this level holding as support. Then we had another support level right there. So all these support levels stacking on top of each other. Then it tried to push up, right? And failed. Broke down that support. Now look what it's doing. It pushes back up and it holds it as resistance. And then goes back down. And this like, you get this from just watching the market. In my opinion, I think this break and retest is the easiest strategy to do, right? Price is always price is doing that all the time. You just have to build the knowledge in watching price action enough times and build rules on top of it to put yourself in the game, right? Think about it this way, right? Think about it this way. In the market, if you just take random trades, let's say I flip a coin every 30 minutes, I flip a coin, and if it lands on heads, I go long. If it lands on shorts, if it lands on tails, I go short. If you take random trades in the market with a 1-to-1 risk to reward ratio over the long term, you're going to be a break-even trader. If you just have risk management, take profit at a 1-to-1, stop loss at a 1-to-1, and just flipping a coin, you're going to be a break-even trader over the long run. So, with that in mind, if you put yourself above, meaning if you give yourself a little bit of an edge in the market, a simple rule like I'm only longing above view up and only shorting below view up already puts you a little bit higher, right? Then you may notice some other confluence. All right, this other confluence, like I got to be careful when it sweeps a level. Maybe, and you build certain confluences to try to increase that win rate. And you don't really, if you think about it, you don't need much to be a profitable trader. You don't need much. You need a little bit of an edge and risk management, and you put yourself above 99% of traders. Now, that being said, you probably won't be crazy profitable. You may be like, 53% win rate with a 1-to-1, which is, barely anything, but it's still profitable. And then over time, you build that discipline, risk management. You understand what you should do, shouldn't do. You make mistakes, you learn from your mistakes, and you slowly start to build that win rate. Maybe start to learn order flow and this and that. And that's how you grow. And the hard part about the market is markets are changing. So you got to be extra careful and know the market condition you're in. Went short at 25.872 with a 1-to-2. Nice. And here's the other thing I would recommend, right? Don't focus on risk to reward necessarily, right? Don't focus, when you take a trade, when you take a short position, don't put your take profit just because, don't put your take profit at, let's say 820 level just because that's a 1-to-2 ratio. I don't recommend that ever. I recommend taking profits based on market structure. Where is price likely to go to? Where is price likely to go to next after it breaks a certain level, right? High probability meaning like, all right, if price breaks this level, it has room. That's why you see a lot of traders saying that. If we break 578, it's got room to X amount of dollar. You know, it's got room to 880s or whatever, you know? So what I would recommend is trade the charts, not your P&L, not risk to reward, not RR, not P&L, trade the charts. If you want a bigger move, maybe you take some profits at a certain level and let the others ride. That'll put you ahead of the game. I personally don't take partials just because it hasn't worked for me. That's not to say it won't work for you, but I just realized with my trading, it doesn't make sense for me. Over the long term, it ends up being the same thing. You know, if I let runners then get stopped out at break even versus me just taking full profits. And see what I'm talking about? Understand? Like probability, when we tap into this resistance level and we drop, right? There is a chance price could take out this low and then start ripping up again. What's that volume line called again? It's called, it's spelled VWAP. VWAP. It's called VWAP. It stands for volume weighted average price. It takes the volume and the price and it plots a line. And when price is at VWAP, it is balanced price. That's why a lot of times you see chop at VWAP because the price is balanced there. And hedge fund, I think Citadel, one of the biggest market makers, hedge funds, right, in the United States, admitted that they use VWAP. So if hedge funds use VWAP, then it's a good indicator to use. And that's why it works, because so many people use it. Here, give me a second. I'll be back. I'll be back in a second. All right. Best advice on staying in the 20% consistency rule. Just take steady position sizes, right? Don't be risking $200 one day and then all of a sudden risking $1,000 the next day. Like, just stay consistent. Have consistent, position sizes. Walk away. Have rules for yourself. Like, for example, even with my Tradeify accounts, I'll have a rule where I risk a certain amount per trade. If I win on the first trade, I allow myself another setup. If I win on the second trade, I'll typically stop after that. Right? If I lose on the first trade and lose on the second trade, I'm done for the day. 2 losses in a row is me locking myself out and walking away. So, like, don't... And what a lot of people do also, and this is like a mistake a lot of new traders make, is what they'll do is when they go through drawdown, they start upping their size. And it really messes up the consistency rule, because if you're risking 200, you go through some drawdown and all of a sudden you're risking 800. Like, yeah, you're going to break the consistency rule. Just be consistent with your position sizes, and I've never had an issue with consistency rule ever, because I'm always having the same position size. I have a certain amount I'm willing to risk per trade, and that's it. I don't go over that amount. It's just what I'm allowing myself to keep myself in the game, allow myself through some drawdown. And no one to walk away. There's nothing wrong with walking away. There's nothing wrong with taking a loss and walking away. This is a game of probabilities. You're never going to be 100% right. Right? There are going to be days where you're just not seeing the market. There are going to be days where you're just taking L after L, and you need to stop. That's why you have rules for yourself. That's why I have rules for myself, for my Tradeify accounts. If I take 2 losses in a row, I'm out. I'm out. No matter what, I'm out because I'm not seeing the market. And it puts you in a good spot because, look, you take 2 losses in a row, you're out. You take a win and a loss, you're pretty much break even, maybe a little bit in profit. You're pretty much break even. So no harm, no foul. You left break even. That's a good place to be in too. Or you win 1 trade, you're good for the day. If you don't see another setup, well, you made money. And if you make 2 trades, you're really good. So you see, like, the upside is pretty good, but the downside is like, it's not too bad, right? What? $10,000 Apex accounts. How much we have? Consistent show how many contracts we can use in one day. Oh, 100. What is it? You mean 100,000? $100,000 account? I'll tell you. Hold on. I'll have to look it up because I don't know off the top of my head. I'll let you know though. All right, with Apex, I personally, I mean, I always get the $50,000 accounts. I don't see the 100,000 really being worth it. Like, just, all right, $100,000. And make sure you don't get the static account. Do not get the static account because there's like $600 of drawdown in the static account. Get the actual, all right. All right, so the $100,000 full account, you're able to trade 14 contracts, which I would not recommend. Profit target is $6,000. Trailing threshold is $3,000. Now, there's no, like, I don't think there's no, like, consistency rule or scaling plan for evaluation accounts. But once you get put in a funded account, then you do have consistency rule, which I believe Apex is 30%. Is it 30%? Pretty sure it's like 30%. But look at this. So the $100,000 account, you have a $3,000 drawdown with a $6,000 profit target. But with a $50,000 account, you have a $2,500 drawdown with a $3,000 profit target. So it doesn't make sense to get it really doesn't make sense to get the $100,000 account, right? The drawdown, the profit target on 100 is $6,000, but the drawdown is $3,000. On a 50,000, the drawdown is 25. It's a $500 different drawdown versus a $3,000 profit target and a $6,000. You're having to make twice as much money on the 100K account with pretty much the same amount of drawdown. 500 difference of drawdown, but twice the amount of profit target you have to reach. So it doesn't make sense. That just doesn't make sense at all. Yeah, it's 30. Yeah, it is. So 30%. After you pass the count. Evaluations don't have a consistency rule. But I would wait. Honestly, I would wait for a sale to happen. Do never pay full price for Apex. I'm not sure if it gives you the 80. I mean, you could try if you put my code in. It may give you 80%. I'm not sure if the default is going to be 80% or they're going to charge you like. Never pay full price though. Apex is always having sales. Usually 80% off sales. So they're going to have one of the sales just ended, so they're going to have one very soon. But there are other look at other, I would say diversify. Once you get pretty decent at trading, make sure you diversify your prop firms. Right? That's why I have Tradeify, I have Take Profit Trader, I have Apex. I don't put all my eggs in one basket. And I only stay with the big prop firms. I don't I do not trade like the smaller prop firms out there. Be careful with be careful with Top Step right now. Just be very careful. Personally, I would not recommend Top Step right now. They're having a lot of issues with their platform. Trading is already difficult in and of itself. You don't want, to be using a platform where it's, glitching out. It's freaking not exiting you out of trades, and it's just a bunch of BS you don't want to deal with. Once they get their shit together, then you can trade with them. But as of now, they're still working on their issues. So I'm just saying, be careful. I'm not saying don't use them if you want to use them, but understand the risk you are taking. You're making trading a lot more difficult. Just trying to spare you a bunch of heartache and possibly, a broken computer if you get pissed off. Yeah, they've been having a lot of outages. Like their platforms, like people being stuck in positions and just a bunch of crazy stuff. Which, listen, it makes sense, right? Anytime you have anything new, right, you have what's called birth pains. So when somebody develops a brokerage, a platform, there's going to be birth pains. There's going to be stuff that goes wrong because it's a new platform versus somebody like Tradeovate that's been around for so long. They've been around for such a long time. They got their stuff together. They got things dialed in already. Or Rhythmic, right? Rhythmic has been around a long time. They got their stuff dialed in. Like I really never have problems with Rhythmic accounts, or it's very rare to have a problem. For me, at least. "15-minute chart lied to me, bro." Well, what do you mean it lied to you? How did it lie? It took out a massive level. All right, let me switch to the 15-minute. I mean, look, we had a low right there. We had a pivot point there too. We came down, we took out that low, and then immediately buyers started to step in super aggressively. That's why this is the reason why I was hesitant to take a short, like this break and retest. When it came back up to short that. That's the only reason I was hesitant, is because it took out this massive level. In hindsight, yes, it worked out. But, and this is what I was talking about earlier. Remember, push up to VWAP. It rejected off VWAP. Now let's see. For me, I may still be interested in a position. If I could see price break this level right here, it breaks VWAP, displaces above it, I would be interested in taking a long potentially. So it displaces above it, comes back, retest this as support, retesting VWAP and that resistance as support to continue going up. I mean, that's, to me, I would be willing to take that kind of trade. We'll see if it happens though. But that's what I was saying. Like, I was hesitant about taking the short once it broke this, right? And it retested this area because it took out that level. I'm like, crap, this thing can just rip to the upside. Now it came back down, took out that low one more time. Now look what it's doing. Broke this level. This is even a break and retest, right? But the reason I wouldn't take this first one is just because of VWAP right there. I prefer to stay out of this kind of, and like I said, one of my rules is do not take longs below VWAP on these accounts. Even though this was a break and retest and it worked good, it's still, it's a rule I have for myself to protect myself. So, because I've had situations where, and this is from experience, when I was longing below VWAP and I just kept getting wrecked and wrecked and wrecked, because you're trying to go against momentum. You're going against what sellers are more in control, and you're going against them. You want to go with the flow, not really against the flow. Unless you have a strategy where it works going against, that's a more advanced thing. But for most people, the general rule of thumb is also go with whatever, whatever the market sentiment is. You could be right all you want, but wrong entry will chop you out. Yeah, exactly. You can have the right, that's the thing. You can have the right idea, but the wrong entry, wrong position size, wrong entry and wrong position size. You can have the right idea, but you still get stopped out. Like, I see this, people do this a lot, right? Where they may have the right entry even, but their position size is so heavy that, let's just say they enter, let's say they enter long somewhere, you know, let's say they enter long right here, right? They enter long right there. Maybe they have a super big position size. Price pulls back a little bit, stops them out, and then goes in their favor. So it's like they had the right idea, but their size was so heavy, they needed to have a stop loss a lot tighter that got wicked out. That's why you have to position size according to where your stop loss should be to make sense. So right now, price is breaking above VWAP, but failing to displace above it. You see all those sellers just stepped in. So far it's just sweeping it, which is not a good sign. That's why I said displacement. You want it to displace, not just push above it. I only scalp against the flow, not longs in my rule. Yeah. And that's why I said, if you're going against the flow, you could do it, right? But understand that the probability goes down just because of that. There's automatically a lower probability because you're going against the trend. So, like, maybe scalp it, right? Position size yourself so that maybe you're taking quick profits. You know, you're not risking a lot and you're taking, you know, you're risking a 1-to-1, getting out quickly. And just take your base hit and walk away. But don't get greedy and try to expect like a crazy reversal and this and that, you know. Never seen ES. Oh, this isn't ES. This is NASDAQ. ES moves a lot. ES is the tame, right? I look at it as like ES is like the goody-goody, like, you know, the child that follows the rules and everything is good, and NASDAQ is like the crazy one, you know, the crazy child that goes to parties, and, you know, the crazy teen or whatever that goes to parties and all this, and like the rebellious one, the freaking degenerate. That's what NASDAQ is. NASDAQ is just volatile and crazy, and it could really, like, NASDAQ can destroy you if you don't trade it right. ES is the more conservative, like, it just moves slowly. It doesn't move fast. It's like more flowy. NASDAQ is like rips to the upside, rips to the downside. You know, it's just more volatile and crazy. Which, if you position size yourself correctly and you know how to trade it and you have experience, you could use it to your advantage. I personally don't like being in trades for a long time. I like to get into a trade, you know, and then hit TP fast after that. And not have to sit there for, you know, a super long time. Yeah, ES and NQ, they follow very closely to each other. That's why a lot of people use what ICT traders call like SMT divergence, right? And that's pretty much, that's all whatever that is when NASDAQ takes out a low and ES fails to take out that low, what happens is it's called a divergence. So people use that as a confluence. But typically NASDAQ and ES, they kind of flow together in a way. Obviously not exactly the same, but typically they flow together. And when ES takes a low, NASDAQ fails to take that low, that's called a divergence. All right. TikTok is making me do puzzles. Hopefully it doesn't kick me out of this live, because sometimes these puzzles don't work. And of course, while I'm getting a setup, potentially, it's making me solve a puzzle. Let's see. Hold on. Give me a second. Alright, we're good. Puzzle finished. Puzzle solved. Sometimes it gives me error messages and it won't let me solve the puzzle. It's weird. Alright, it is kind of displacing now. Crap. Should I? Is this? Let's see. It's a little bit tough because I would like a little bit bigger displacement, but I would like a little bit bigger displacement than this. Because the idea when it displaces more, pulls back, then I can target that high. But right now, like if I take this long right here, what am I gonna really like look for the breakout? I can't target these levels because it's not enough of a displacement. I would like to wait for a bigger displacement to make sure this thing just doesn't sweep to the downside and fail. So we'll see what happens here. I mean, I've already taken 2 trades today, so I'm kind of like, after taking 2 winners in a row, I'm like hesitant to take a 3rd trade just because I don't want to screw things up, right? Unless it's like a really good setup where I'm just like, holy crap, this looks really good. Then it's like, okay, but after 2 winners in a row, I'm like, do I really want to screw this up for myself right before a weekend? Like, do I want to give back profits when I've been seeing it pretty good? Lost my first trade for $50. 1 contract MNQ. Nice. I mean, listen, that's good position sizing, right? You don't want to be sized in so heavy that you start getting super emotional, right? Like $50, you're like, all right, it's fine. That's the headspace you want to be in, where you can lose money and go, all right, that's fine. $50, it's all right. Well, we can wait for the next setup. It's no big deal, right? There's going to be another trade. Down 1K just takes my express at this point. Oh man, dude. See, that's what happens when you and no shade on you. We've all done this, and that's just like what happens when you're sized in too heavy. You take 1 loss, and trust me, I've been in that same situation. Where you're sized in too heavy, you take 1 loss, and you're like, screw this. I don't even care anymore. I'm so close to, like, I don't care anymore. Like, you want to learn how to get out of drawdown. Because if you never learn how to be in drawdown and get out of drawdown, then it's just like you're always just going to be blowing accounts. Like, position yourself in a way that, like, for example, like, take Profit Trader has a $2,000 drawdown. You don't want to be risking $1,000 per trade because you take 1 loss and you've lost half of your drawdown. Versus like me, right? I can take like $200 risk per trade. Worst case scenario, I lose $400 in a day. That's my absolute worst case scenario, is I lose $400. So it's like, it'll take me multiple really bad days in a row of losing trade after trade after trade after trade after trade to blow my account. Which the probability of that happening is, as long as I'm disciplined and I know, is pretty low for it to happen. I mean, there are people that rinse accounts. I don't know, like, some people can do it. They got a lot of money. I personally don't have $5,000 a month to spend just on evals to blow evals through. It's a lot of these traders you see online that are constantly posting crazy P&Ls. They are rinsing evals like there's no tomorrow. Trust me, I know of traders that are pretty popular on like YouTube and stuff, and they've said that, they've given away the numbers of how much, like $5,000-$6,000 a month on evals. Now, they do take crazy payouts, but they are rinsing accounts. So don't think that those traders are just like, constantly taking win after win. They're understanding that they got the money to rinse accounts. Most people aren't in the position to be rinsing accounts. You got to be, and also it affects you mentally, right? If you ever want to go to a live account, that will screw you up mentally. When you're like trading that way in a prop firm can work, but in a live account, if you can't make that transition, it's going to be very hard because you've built up those bad habits. It's going to be very hard to break bad habits that you build. That's why I really don't recommend it. You do not want to build bad habits that are going to be very difficult to break. Don't give money back to the markets. Yeah, exactly. It's called greed. And I understand probability. If I took a winning trade and then I took another winning trade, I'm like, now look at it. There's a probability, there's a possibility that, right, I could take a losing trade the next trade, because not also look at time, right? In the morning, damn, my throat's like, in the morning when we have like 9:30, 10 o'clock price action, right? Price is moving good. It's going to certain levels. The closer we get to 11 o'clock, price tends to kind of go sideways. Volume starts to die down. So when volume starts to die down, you're you know, it becomes a little harder to, like, there's a higher chance of you getting stuck in chop. That's also the other reason why I'm very iffy about taking another trade, is because it's 10:42. We're coming on the 11 o'clock mark. Volume is going to start to die down, and you can literally see it in price right now. Look how price is moving. Like, it's having trouble. It's just stuck at view op. Right now, price is balanced. It's not really doing anything. So it's like, do I really want to take a low probability setup with low volume? Now, like, if this thing really started to move and displace and, like, show me signs, then, you know, maybe I would be willing to risk. Maybe I would size down a little bit just to, you know, protect my profits for the day. The EMA's on 15-minute crossed and then uncrossed. That's why I re-entered. Oh, I mean, yeah, you have your confluences, and follow your rules. That's the biggest part. Have rules for yourself and follow them. Rules that you set in place for yourself they are not meant to hinder you. They're meant to protect you. Just as rules in a business. Every business has rules to protect itself. Same thing with your trading. You have rules to protect yourself, to not blow your account. Because in trading, guess who your worst enemy is in trading? It's not the market makers. You are your own worst enemy in trading. And that's just a fact. You are your own worst enemy. You are the one who is going to destroy your account. You are the one who's going to go on tilt. You are the one who's going to take stupid trades. You are the one who's going to blow accounts. So you are the only one stopping yourself from becoming a profitable trader and a disciplined trader. And some people have to learn the hard way. Some people get wrecked enough times to where they're like, you know, I'm going to stop doing stupid stuff because I keep getting wrecked. That was me. Trust me. I've gotten wrecked. I've gone through the fire with trading. I've learned the hard ways. And listen, I've been through it. Now, you know, I'm a disciplined trader. Now I can see price move and this doesn't bother me. Like, I'm not sitting there like itching to take a trade. Price can move, and if it doesn't give me a setup, I walk away. So, oh man, well, it is a good way to start the weekend, but it feels so weird. These past few days have felt so weird. I guess it happens every year. Like, yesterday felt like a Friday. Today feels like a Saturday. It's like, I don't know. It's just everything is off. Everyone's schedule's all messed up. I guess most people are off today, right? I don't think most people are working today. I'll be working today. Yo, I'm brand new to trading, so this might be a dumb question. But what's the difference green and red? No, that's not a dumb question. If you're a beginner, to an advanced trader that would be a dumb question, but like you're new to this, so there's no dumb questions when you're new to it. So these are called candlesticks, and pretty much candlesticks are telling you what price has done within. This is the 1 minute chart, so every chart is going to tell you different. Like a 15-minute chart means a 15-minute candle printed, right? A 1 minute chart is when you're on a 1 minute chart, these are all 1 minute candles. So every 1 minute, a candle will close. So like right now, you have price opened up. Let me see if you can see. So see this low right here? Price opened up. And when price pushes above its opening price, it turns green. And that means price is above. So see, price closed above its open price. And that's why this candle printed green. These wicks are what price went to. So what this candle is showing you, that price opened up at 25,881, right? Price made a low down here of 25,877. Price made a high of 25,891, and then this top line right here is where price closed. Price ended up closing at 25,889. The next candle, you see it opened right where the price closed. Now, if you see when it goes above it, it turns green. When it goes below it, it turns red. So that's just the basic of what a candle is. It's just showing you what price is doing. So when you'll see when it pushes above this price, it'll turn green. And then once the minute closes, it just prints. And it shows you, see the lows and highs it makes. That's the low it makes, so it leaves a wick. If it pushes lower, the wick is going to grow. So see, it closed right there, pretty much where it opened, but under the opening price, so it's red. So it's pretty simple. I'm gonna go short. Oh, be careful. I mean, we're above VWAP right now. We are pushing above VWAP, so be careful. I mean, I'm not telling you to do anything. If you know, if you want to go short, go short. I can't give you financial advice or anything, but I'm just saying, like, you know, have your. I can't tell you, like, for all I know, this could be a good setup for you. I mean, maybe your strategy shows you that you should be going short, and if that's the case, then go short. But you are the only one who's gonna know that. It's like what may be a bad setup for one person, maybe a good setup for another person. Yeah, no problem. Just wait and see. 15 minutes CRT. We'll see. I mean, I get, like, when price pushes above VWAP, I'm like, oh crap, like we're getting into bullish territory now. But who knows? I mean, this thing may not have the volume to continue pushing up because of, you know, it's Friday. It's the day before. So who knows? I mean, right now where price sits is it's balanced. That's just that's a fact. Price is balanced right now. Until price starts to displace in one direction, then it'll start to get. But as of now, we're just chopping at VWAP. I mean, like, buyers aren't willing to step in and sellers aren't willing to step in. This is literally what you see is the algos, the bots. Literally the bots are what you call, like, they're fighting against each other, right? Like, you have bots that, like, nobody wants to make the first move. It's almost like nobody wants to make the first move because we're at a balanced price range. So going short is not the best idea, and going long is also not the best idea because you really don't know which direction it could go in. This thing could rip to the upside right now, or this thing could rip to the downside. And that's why you see when price starts to displace, volume starts to step back in again, and you see bigger moves. But then when we're at VWAP, it's like nobody wants to make the first move. And it's just like chopping sideways until price really starts to, you know, go toward one direction. Then you start to get those moves. All bearish candles open bullish. I mean, not all of them, but maybe a high percentage of them. Can you celebrate with me? I don't have trader friends. Yeah, I can celebrate. I'll celebrate with anybody. I mean, I'm in the same. I don't really have I don't have trader friends either. I mean, it's like I don't. You know, I do trade live. I request some. Oh, are you serious? Nice. Congratulations. Honestly, that is a huge milestone. Requesting your first payout. Like, seriously, be proud of that. Congratulations. Like, to take an $18,000 payout, you've obviously done things that are correct. So, what I would just recommend, keep doing what you're doing. You know, obviously you were disciplined. And you were disciplined. You took the right trades. You were, you know, you followed your plan. And continue doing that. But congratulations. That is a huge... 18 grand is a really big payout. That's a... Honestly, and that's a good way to... That's a good way to end your year. Right? Now you can go into the next year. You know, keep doing what you're doing. Continue being disciplined. And, yeah, continue growing. But, yeah, congratulations. That's awesome. It really is. I'm kind of jealous, to be honest with you. I wish I got a $18,000 payout. Thank you guys. Tears of joy. I have more cries of depression this year from trading than happiness. Listen, that is something we all go through. Trust me, man. I've been through so much tough times in trading. It's a lot. It's tough. I mean, that's exactly why trading is so... It's the fact that trading is so difficult is what makes it so awesome, right? Because if trading was easy and everybody made money trading, it wouldn't be as special. The fact that you could sit there and do something that is so difficult and figure it out, it makes it so much more rewarding because you're doing something that is so difficult. I mean, you think about trading, hedge funds hire some of the smartest people in the world. I mean, you're talking about quants that have PhDs in mathematics from Harvard University. And you know, they're like some of the smartest people in the world. And that's who you're going against. That's who you're trading, is some of the smartest people in the world. And, you know, when you can discipline yourself and get to that level, that seriously, you should be proud of yourself. That's why, you know, that's why prop firms is like, prop firms are a big blessing to a lot of people. Like, when you're disciplined, prop firms can absolutely change your life if you are disciplined and you figure this out and you're not just blowing accounts left and right and, like, you know, getting to the point where you can't trade anymore because you've blown so many, you know, accounts that you just don't have money to trade anymore. You know, it's a long-term game. It's like, trading does take years to learn. Trading does take a while to learn. So, prop firms, when you figure it out and you're disciplined and you start taking those payouts, it absolutely can change your life. And that's why I'm a proponent of prop firms. A lot of people shit on prop firms, but listen, prop firms are one of the reasons why I've been in trading for so long, right? If I was to blow live accounts like when I was learning, if I blew live accounts like I was blowing prop firm accounts, I would not be trading anymore. I wouldn't have lasted long enough to learn this game. And that's where a lot of people failed, is because, you're right, they didn't last long enough to learn. Bro, I just got my first payout, 10x all the money I spent. Not awesome. That's the fact. We are living in some of the greatest times in terms of money. We are living in some of the greatest times right now. Like, the fact that you can develop a skill, spend $100 and get thousands of dollars in return is absolutely wild. That return on investment is absolutely crazy. It's like a skill that you can learn, and then once you learn the skill and learn the discipline, and then you start really, like, copy trading multiple accounts. Like right now, I have what? I have 7 funded accounts and 1 evaluation with Tradeify that I'm trying to pass. Those 7 funded accounts, that was $225 across 7 accounts, and then Tradeify account $313. That was because I copy traded. So how much money is that in one day? That's technically 225 times 7 plus 315. That's $1,900 in profit. That's the kind of times we live in, when you can really scale with these accounts. You can invest some money and absolutely and that's why you've seen, I've known traders, there are people who got $600,000 payout, $1 million payout. Like, that's the level that you can reach. And it's honestly inspiring when I see a person take out, $1 million payout from Apex. Like, that's inspiring. That's something that I want to discipline myself and build myself as a trader to get to that point. And I know eventually I will get to that point. I will. It takes time, we're all at different levels. Don't compare yourself to other traders, right? If you only got 1 account, don't compare yourself to person trading 10 accounts. Like, just know, be disciplined, and you will get to that level. Are you bullish biased? Or right now, I'm not any biased. Right now, we're just chopping sideways until price really displaces. Right now, it's technically bullish because we're above VWAP, so we're holding VWAP as support. So technically, we're in bullishness. We're in bullish, like a bullish sentiment right now. So if you were to take a short right now, you'd be kind of going against the flow. Not to say that it can't drop, but like just that's the general market sentiment right now is we're in bullish territory. We're above VWAP, but we are also at 11 o'clock, which we're in a time that price volume dies down, price starts to chop. So just be careful. I appreciate the support celebrating this. I don't have anyone to share this with at the moment. That's seriously like, that is a massive milestone. You should definitely, what I would recommend, honestly, what I would recommend is take that money. Obviously, I don't know your financial situation. Put some away to taxes. Make sure you put some away to taxes, and put some away to taxes like in a savings, and don't touch it. And then take some of that money and honestly go like celebrate, go treat yourself. Whether, maybe go for the weekend, take like a vacation for the weekend. Go take, like, I used to take these trips. We used to take these trips like to Washington, D.C. for the weekend. And it's not even that expensive, and you kind of get away for the weekend. It's like $100 plane ticket. We go, rent a hotel for the weekend, stay there, and you end up not spending a lot of money. But whatever you want to do, just go treat yourself. Whether you buy something for yourself, but reward yourself. Now, don't spend all the money and blow it, but... and then put some away and trade prop firms too, right? Now you got, listen, you put money away for taxes. You take some money and treat yourself. And then you also take some money, and now you're able to, look how much money you have to go and buy more accounts, right? Now you can get some more accounts. And especially look when Apex has 90% off. When Apex has their 90% off sale, and you've already built the discipline and you could do it, and you can start scaling up with accounts. But make sure you stay disciplined when you're scaling up with accounts, because then you require more discipline, because, right, you copy trading more accounts. When you blow those accounts, you're spending more money. But now you got so much room to work with capital-wise that it goes up from here. If you continue going up from here, you can start copy trading, and you can start getting those thousands, $2,000, $3,000, $4,000 days. And then, right, that $18,000 payout copy traded onto multiple accounts can turn into a $180,000 payout. No, they're not 90% off. Right now, they don't have a sale going on right now just because they just ended their sale. They were 80% off. Their sale just ended, but they're going to have another sale very soon. They're always having sales. So when a sale ends, they have like a little window where they don't have any sale, and then they'll have another sale. Probably, maybe next week even, they'll put out another sale. But you can also look into other accounts too. I mean, take PropFirmTrader, Tradeify. I mean, they all kind of average to the same price, to be honest with you. Like, it all typically comes down to the same price, because like, you look at Apex, like when they're 80% off, a $50,000 account is 33 bucks, but you have an activation fee, so it kind of comes out to like 100 bucks. Then you have take PropFirmTrader, that's $100 or around there, but they don't have activation fees. So it kind of like, every prop firm is pretty much like at the same price level. But Apex does have those times where they had recently where they were like, bro, they were like 80% off and $25 activation fees. So it's like, you know, or they're 90% off. And so pretty much what I'm saying, most of them are typically around the same price range. Now you do have different rules, you know, like my Tradeify accounts, they have an end of day drawdown. They don't have a trailing drawdown. It's end of day, you know, and take PropFirmTrader, they have daily payouts. So every prop firm has its own like benefits and minuses, and so that's why I diversify. How much to put away for taxes? I mean, I would personally, I would say check on Google. I mean, check on Google, but like I would say put away like 30%. Like, just to be safe, put away like 30% and don't touch it. I went to go buy an Apex yesterday. They were charging $196. Did you put in like a code? Anybody's code? Because I'm actually wondering if when they don't have a sale, if you put in the code, does it still charge you full price or it gives you a discount? Because it may give you a discount. Like when they're not having a sale and you put in like a discount code, it may give you a discount. Can you go long and short in different prop firms right before big news? I mean, technically you can if as long as the prop firms don't have news rules. Like my Apex accounts don't really have any news rules. My take PropFirmTrader accounts, I have to be flat 1 minute before and 1 minute after big news events. So there are certain prop firms that you cannot trade news, and there are prop firms that allow you to trade news. Yesterday I put your code in. That was the charge. Oh, all right. So they're not. Just wait. They're gonna have another sale very soon. Maybe even on Monday. Like usually they don't go a long time not having a sale. They have like a little breathing window, but it'll come very soon. Probably sometime early next week. I'm guessing sometime early next week they'll have another sale. Probably 80% off. Usually they're at 80. But yeah, never pay full price. Just be paid. That's like the worst thing you could do is pay full price for something that, you know, usually has 80% off. And here's another tip. If you ever, you know, blow prop firm accounts, make sure you cancel the subscription. Because if you do not cancel the subscription, it could keep charging you. So you can have to go in your dashboard and like make sure that subscription is canceled when you if you blow an account. All right, so we're getting movement up. But again, it's not like, see what was happening here? This is what I want to see. We made a high. This kind of displacement where look at the volume that comes in. It pushes through that level. And then you're like, all right, taps back in and then continues going up. I want to see it displace with volume and like momentum. These kind of like tiny little displacements, it's not displacing with volume. So you're kind of getting this like, you know, obviously this displacement did work, but like, it's kind of, it's not what I want to see. if you're already profitable and have some money, why not do it yourself? I mean, I'm planning to open up my next payout whenever that's gonna be. Whenever I get my next payout, I'm planning to start a live account, to fund a live account. But here's the thing, right? Prop firms, it's just like, there's so much opportunity. Like, even when I have a live account, I'm still gonna copy trade prop firms. My plan is to have a live account and have prop firm accounts that I'm copy trading from my live account. So it's like the best of both worlds. But I don't ever want to leave prop firms because it's like what's the point? If I really do know how to trade and I can invest, let's say $300, and I can get 3 accounts and copy trade those 3 accounts and make $1,000 a day. Do you understand? Like, do you know how big your account technically has to be in a live account to like conservatively risk $1,000? So there's like so much upside potential. If I can invest $300, pass the account, get put in a funded account, get to that payout level, and then take a $10,000 payout from a $300 investment, bro, that return on investment is just absolutely wild. So it's like the opportunity cost with prop firms is like so crazy that, but I do still want to grow a live account. So that's my thing, is like, I want to be able to slowly grow a live account. That's why I want to start my own account. But if you do know how to trade, why not do the best of both worlds? Why not have a live account and then use a copy trader to copy trade your funded accounts from your live account? And just, you know, keep switching out. Or break it down, you know, take trades on a live account and take some trades on a funded account and just kind of like split up your, you know, eggs. So like, and so you can grow a live account and not even have to take payouts because you're taking payouts from your funded accounts, and then you could just let your live account keep growing. It's just like, you know, with funded accounts, the opportunity cost is so crazy that I don't ever want to leave it. I would have to be like, you know. And then when you get to a level, bro, when you have, you know, 20 Apex accounts, 5 take profit trader accounts, and you're really starting to scale like crazy, like the money you are making eventually, the opportunity. Imagine if I make $400 in one day and I had 30 accounts, dude, $400 times 30 accounts, that's a $12,000 day. That's like wild. Like and those are the people you see taking out, you know, $1 million payouts and this and that, like, because they're copy trading so many accounts. They're making, you know, like a $15,000, $20,000 day copy trading accounts. And then if you have a couple $15,000, $20,000 days, imagine you get past that buffer zone and you're making $15,000 days. That's absolutely wild. I'm telling you, man, we are living in some of the greatest times right now. Like the greatest opportunity. You're living in a generation with the greatest opportunity to make money if you can really discipline yourself and learn a skill. Like, none of us really know how long these prop firms are going to last. Hopefully they last forever, right? I'm hoping these prop firms last forever. But you never know, right? So you want to build the skills so that worst case scenario, if something ever does happen to prop firms, that you can always go to a live account. And you've already saved up some money. You've already learned how to trade. So like, you have prop firms that are a really good opportunity for experienced traders, and they're also a really good opportunity for people who don't know how to trade, right? If you can buy an Apex account for $33, and if you blow one account per month, well, you just spent $33. It's not the biggest deal in the world. You're able to get exposed to the market for $33 a month. That's pretty good. Or you could trade a sim account, you know, fully, but most people don't want to do that. What I've seen is trading funded accounts in the AM and live accounts in PM. or certain strategies unfunded and other strategies on live accounts. Yeah, so like what I do, right? I have different strategy. I have two separate, like my Tradeify account that I'm trying to pass the evaluation for, and then my funded accounts. I have two separate strategies for those accounts. They are two completely different strategies. So I'm kind of like, you know, diversifying. There's so many ways you could do it, right? There are so many ways. I mean, some people trade one account at a time. Like they'll take a trade or they'll split up. They'll take a trade on one account. If they lose, they take a trade on the other account. And if that trade is a winning trade, well, they just won on this account. And they'll keep like kind of cycling those accounts and kind of getting to that payout. And then whichever accounts get to that payout first, he starts taking payout. There's so many strategies you could do with these funded accounts. All right, we are just honestly, I'm gonna give it a couple more minutes and I'm just gonna probably, you know, hop off for the day. I mean, we've like, look at this. We've displaced and now we're just like, we've pushed into that pivot point. So you see that R1 right there? That's a pivot point. Literally tap that pivot point and just reject it off it. Now we're below view up. Now we're in bearish territory. So we're just like, we're really just chopping. But yeah, if you have any last questions before I hop off, now would be the time to ask. But appreciate the follows. I appreciate the likes. Thank you for the support. I appreciate it. I appreciate you guys that use my code. It really does. I do appreciate it because I don't have a Discord. I don't charge for a course or any Discord. Like I don't want your, you know, I don't want your money. So it's just a way of if you're gonna, you know, buy accounts anyways. When you use my code, it does, you know, it's just a way of supporting me, and I do appreciate it. And if you don't want to, I'm no hard feelings. If you want to use someone else's code or whatever, that's no hard feelings. Dang, we're really starting to go drop. Da, da, da. All right. Crap. All right, well, what time is it? All right, it's 11:15. I'm gonna hop off. Anyways, I'm not taking any more trades today, so I think it's best just to call it and come back Monday fresh. Hold on, how many more days do we have? Where's my calendar? Let me look on my phone. How many more days do we have trading this year? I'm assuming we got, it's the 26th. Oh crap, we got like a couple more days. We come back on Monday is the 29th. So we got 29th, 30th. Is the market open on the 31st? I don't think so. Let me look. So we are early closures is Christmas Eve and day after Thanksgiving. Okay, so the only thing is New Year's Day. So January 1st, the market's closed. But before that, it's good. So technically, there's 3 more days of trading. I honestly, I don't know how the price action's gonna be. But, you know, I'm still gonna come in and I'm gonna understand, you know, I'm gonna just, like what I did today, I'm just gonna take base hits. I'm not gonna be greedy or anything or try to end this year, you know, couple more wins, and then try to start out the new year fresh and good and on a clean slate. But yeah. All right. Y'all have a good weekend. Stay safe. Don't blow any accounts. And, yo, bro, I blew $4,500. Now I need some advice before I go crazy. You blew, hold on. Let me, was this a live account or was this a PropFirm account? Did you take any trades today? Yeah, I took two winning trades. 2 separate strategies, 2 winning trades. I had a good day today. Back-to-back winners is pretty good, especially with different strategies. I fell asleep mid-trading, got cooked. Oh, man. How do you fell asleep? Have your, like, bro, I don't know how, bro, that's a skill. How do you fall asleep when you're in a trade? That is wild. When I'm in a trade, I'm sitting there like my freaking eyes are just glued to the screen. Like, I can't stop looking at it when I'm in a trade. I don't know how you fall asleep during a trade. That's crazy. Live account? Oh, man. I would recommend not trading live accounts. Looks like you were risking just too much. Or obviously, I don't know your account size. Who knows? I mean, maybe you have $1 million account. I don't know. Sounds like you're probably risking too much per trade and you win on tilt, or you win on tilt. One of the two happened. What I would recommend is don't, you know, try not to. I mean, if you blew your account, then stop trading live accounts. If you're just like, if $4,500 is just like, you know, drawdown for you, where it's like, it's worse than usual, but it's not the end of the world drawdown, then what I would recommend for you is size down. That's the biggest difference where a lot of traders go wrong, is when they go through losing streaks, they start sizing up to try to make back that loss. Don't do that. When you go through a losing streak, size down. Take a step back, size down, and just take some base hits. Take some wins under your belt before you start to size back up again. What you want to do is when you go through losing streaks or a drawdown, you want to size down to protect yourself. So take a step back, size down, reevaluate what you did wrong, whether you're sized in too aggressively, you win on tilt, whatever it is, realize it, and make sure you don't do it next time. Don't make that same mistake. Yeah, people trying to promote their codes. Whatever. Yeah, I'm giving this advice for free. Most traders you see right now on TikTok, they're giving you advice, but then, you know, hey, I got 5 mentorship spots open. There's you know, link in the link for the Discord is down below. Like, I don't have anything to sell you. I really don't. I don't want to take money from. I know trading is already hard, and you know, taking money from people, and I personally, I don't want people to copy me. What usually happens in Discords is the person takes a trade and everyone copies the person trading. I don't want people copying me. I tell people all the time, do not copy me because you will get wrecked. I'm trying to teach you what I know from years of experience in trading and the things that I've learned the hard way so you don't have to go through it. You know, when you copy me, you will get wrecked because I trade, my position size is different. I trade multiple accounts. You don't know what strategy I'm trading. Like, so don't copy me. Don't make that mistake that people make. Bro, I grew that account from $100. That's why I'm so upset. Dang, listen, that's impressive. If you grew that account from $100 and you had thousands of dollars in that account, be like, you know, don't be super mad at yourself. I mean, you lost money that, like, you made. So technically you lost profits. You didn't lose So just make sure you realize what you did wrong. That's the biggest part where a lot of people fail in trading. There's nothing wrong with making mistakes, but the problem happens when you don't learn from your mistakes and you keep repeating the same stuff. That is the definition of insanity. When you do the same thing over and over again, expecting different results. If you make the same mistakes that 90% of traders make, guess what? You're going to be stuck in that 90% bracket of people who lose money. So figure out what people do wrong and do the complete opposite. Be a disciplined trader. Just learn from your mistakes. That's the biggest part. There's nothing wrong with making mistakes. Have rules for yourself that prevent that from happening. Risk a certain dollar amount max per trade. Have a certain trades you take max per day. Like a rule for myself with my Tradeify accounts, like I said before, if I take 2 losses in a row, I lock myself out. I am done for the day if I have 2 losses. So it's impossible for me to lose more than a certain amount of money that I already have pre-planned. It's impossible because I'm disciplined. I'm not going to take more than 2 L's in a row. And if I didn't have that rule, then who's to say I don't take 10 losses in a row? Then it's just like it opens you up to so much more risk when you don't have rules. I do the same thing and make green days every day. Market is rigged. And make green days every day. I mean, it's the market's not rigged. It's probabilities. That's all the market is probabilities. And you have to set yourself up for the edge to be in your favor. It's moments in time. There are certain moments in the market where if you look at the market long enough, like if you come into the market and you stare at the charts day after day after day after day after day after day for years and years, guess what? You're going to start to notice some patterns. You're going to start to notice certain behaviors, in that ticker. And you capitalize in the moments in time. Or I've seen this happen again. I'm willing to put X amount of dollars on the line. And it's tough. Like, I think a lot of people say the market is rigged because it is very difficult. It's a thing where it seems easy, but it is incredibly difficult. And that's a good thing. I love that the market is difficult. I personally love that it's such a high, it's so hard to be successful in this industry that's the rewarding part, is when you can be disciplined more than everyone else, you separate yourself and you could be the few that actually make it in this industry. But most people are their own worst enemy. That's why they fail. And be disciplined in your everyday life too. It's the simple stuff. It's the simple stuff like making your bed or disciplining yourself to go to the gym, or disciplining yourself to, clean the house, or disciplining yourself to do this or that. Like, discipline in day-to-day life will trickle into your trading, because if you could be disciplined in your everyday life, then you could be disciplined in trading. But if your everyday life is just chaotic and, your house is always messy and you're never wanting to do anything and you're just lazy and you're not, you're never disciplining yourself, then listen, it's going to trickle into your trading. You're going to take a loss. You're not going to have the discipline, and you're just going to take another loss. You're going to go on tilt. You're going to oversize, over leverage, blow an account. The market's not forgiving. The market will absolutely slap you, punch you. It will destroy you if you're not disciplined. That's the biggest thing in the market, is discipline. That goes into risk management. That goes into your psychology, being disciplined psychologically, being disciplined with your capital. Number one thing in the market is discipline. And that's why you have hedge funds. Hedge funds hire trading psychologists. Hedge funds hire risk managers, right? Those people are there and they're monitoring. Like when you had live traders, they're monitoring people that if you start to take L after L after L, right? The risk manager will come in and say, what the hell are you doing? Like, listen, leave for the day, get out of here. Like, that risk management will kick you out and tell you to leave if he sees that you're going on tilt and you're, us as retail traders, I don't have somebody over my shoulder that's gonna, tell me to leave. So I have to be that person for myself to tell myself to, like, listen, what the hell are you doing? Stop and get out of here, because you're gonna absolutely wreck yourself if you stay. So if the market is rigged, just do the opposite. Yeah, it's like, technically, if you keep taking L after L after L, if you would have just took the opposite position, there would have been win after win. That's the thing, right? When people are going on winning streaks, they got no problem. But as soon as people go on losing streaks, the market is rigged. This market is this market is that, this is BS, this is that. It was all good when you were taking winning trade after winning trade, right? The market wasn't rigged. But all of a sudden, when you're going through losing streaks, which, by the way, every single trader goes through, it automatically becomes rigged. It's not rigged. It's just, listen, I've been in the situations, even trading after all these years, where I start to question, I'm like freaking, especially it really affects your psychology when you take a loss after a loss after a loss after a loss, and you're thinking, you're like, what the hell? How can I not take a winning trade? Like, this is wild. And you really do start to feel like it's rigged against you, because you can't take a win. And that's when you have to size down. That's where you have to reevaluate your losses and see what you are doing wrong. If there's anything you could have done to potentially turn that loss into a win, and go from there. Faxon, you can't be green every day because reversals exist, and that's brutal. Yeah, in the market, listen, the market's probability. It's like, this is the market. People have different strategies. Two traders can take a trade at the exact same time against each other. They're both trading their strategies. One person takes a win, the other person takes a loss. The person that take a loss, does that mean they're a bad trader? No, that means maybe their win rate, they may have a 60, 70% win rate. That was just one of their losing trades. Based on statistics, when you have a 70% win rate, you're going to lose trades. You're going to have losses. So taking losses is a part of the business, right? Like, you have a business where you pay rent, where you have to buy inventory. Trading is not a business where I have to pay rent or buy inventory. So part of my expenses is taking losses. When I take a loss, that's just a part of doing business. What platform are you using? I use NinjaTrader. I use NinjaTrader. Other people use, TradingView. There's some other platforms. Regardless of what platform you use, just go with the most popular platforms. I mean, NinjaTrader is a very popular platform. NASDAQ is absolutely killing me right now. Listen, this is like the market. The NASDAQ can destroy you when you trade this right here. This right here, what you see, this will destroy a trader. Especially if you have stop losses that are like very close. People that trade very tight stops, this will absolutely destroy you. Because you can go long, price pulls back, stops you out, goes in your favor. And then that's where people think it's rigged. But it's not rigged. It just took out a low to go higher. That's why when the market opens up, look how we were moving. The closer we get to 11 o'clock, the less likely I'm inclined to take a trade. Like, it's just like, it's not moving as well. Like you look at this displacement and how much volume came into the market. Look at that. Like, rip through, pull back, continuation. And then you look at closer to 11 o'clock, where the displacements do work. Like, you have this displacement right here, pulls back and goes higher, but like, you see how it was struggling to go higher. It's just like, And now we're just like, you know, we're back up to view op now. We're stuck at view op again. I need NASDAQ to go up right now. Listen, it's if you're break even right now, and it's like, it may be better just to kind of call it instead of like, the market's just not moving. It's like barely, like, it's just stuck at view op. So that's why I'm inclined. I hate being stuck in chop. I hate being stuck in chop when you're sitting there and the market's just not going anywhere. That's worse than just sitting here without a trade on. Do you mog, bro? Yeah, I do not mog. I don't think guys. I don't believe in that whole like I don't believe in that whole mogging stuff. I think as a man, right? You as a man should be disciplined. You as a man should work out, and you as a man should build up yourself. If you're in your I'm gonna give some advice. If you're in your early 20s, Stop wasting your time. Stop chasing the girls. Build yourself. Build your value as a man. Build your value. You have to develop a skill. Build your value. Your early 20s is the time where you should be taking risks, especially if you're like living with your parents and this and that. You take risks. You build yourself up so that when you get into your 30s and 40s, you are the guy who is making good money. You're living the lifestyle. You're making the really good money because you took your 20s to build yourself up, to build up that skill. Regardless of what skill it is, any high income skill takes a long time to learn, right? If it was a skill that was very fast to learn, it would not be high income, right? The reason McDonald's does not pay $100 an hour or $300 an hour is because anybody can learn how to work at McDonald's. You can take anybody off the street, give them a couple hours, and they're gonna know how to work at McDonald's. That's why. Anytime you have a job where everybody can learn it, it automatically is a low income skill because they can just get rid of you and hire someone else. But when you develop a skill that is very valuable, then people are gonna pay you a lot of money because it's very hard to find a person to do that skill. And that's not necessarily just trading. That's why trading pays a lot. But you look at trade jobs like welding, right? Or I'm in the car business. Like certain trade jobs like a frame machine, like a guy that does frame for cars, a painter. They all get paid good money because that's a very difficult skill. So all of them are getting paid really good money because they develop a skill that it's not easy to find that somebody to do that skill. And everybody that does the skill, everybody's charging a lot of money because it's a skill that takes a long time to learn. So if you're in your 20s, stop chasing the girls, stop wasting your time, build your skill. This is the time so you build your skill so that you could be successful as a guy. You do not want to be in your 30s who's broke, and then you definitely won't get any girls. Listen, every girl is technically like a gold digger to an extent, and that's not no shade. That's how it should be, right? Obviously, no girl wants to be with a guy who's broke and doesn't have everything, it has anything together. Obviously, a girl doesn't want a guy like that. So you as a man have to become the dude. You have to make the money. You have to go to the gym and become that guy. And even things like going to the gym, you build discipline, right? And the older you get, the harder it is going to be get out. If you're not disciplined, the older you get, the harder it is going to be. The older you get, the harder it is going to be to make money, because when you do get married and you have a family or this or that, guess what? Now you can't risk as much. Now you can't put the time in because now you have a family, you have kids. You can't put in the effort that it takes necessarily. You can, but it's going to be a million times harder versus somebody who's like, who has all the time in the world to take risks and to, build up the skill, a high income skill. Trading isn't a skill. Retail just doesn't have insider information. Be for real. Trading is absolutely a skill. You do not need insider information to be successful in trading. Trading is a game of probabilities. So take this as example. I just read recently there was a hedge fund that was hiring chess players. Professional chess players were getting hired to work in a hedge fund. Why? Because their brain works what? Pattern recognition and probabilities. Same thing, you take traders that play poker, like professional poker, very good traders because they understand probabilities. Trading is a game of probabilities. That's all it is. And when people think that trading is like, trading is not like a business where you can learn it to a point where you never take losses. You have a strategy and you follow the strategy. And based on your strategy, you have a certain profitability. You have a certain probability win rate, right? When you're going with the trend, you're automatically putting yourself in the good. You're going with the trend. You're putting yourself automatically above the game already because you're going with the flow. So the probability now goes up because you're going with the trend. Now you have to look at position sizes, and it's like it's difficult. Of course, it's difficult. But you absolutely do not need insider information. Why COD play? You talking about Call of Duty? Yeah, anybody who has even gaming, yeah, gaming could play into trading, could help you technically. But it's pattern recognition. Like when you look at something long enough and you see something happen over again, like when you see price a lot of times breaks out of a level, comes back and retests it. Breaks out of had a level, breaks out, comes back, retests it, goes lower. Breaks out of a level, comes out, break tests it, goes higher. Like it's constantly breaks out of, you have this level down here, breaks out, retests it, goes a little lower. Like it's just how price moves. When you realize how price moves, you put yourself in the position and you build rules on top of it. Gold is crazy. I've never traded gold, but I heard gold is absolutely it moves really I don't know. I heard you can get wrecked on gold. I just never I don't want to switch when I'm already when I already know how to I've been watching NASDAQ for 2 or 3 years already. So it's do I really want to learn a whole new, ticker? I don't know. I mean, if you develop a strategy and you know how to trade gold, by all means, yeah, trade it. That's awesome. Me personally, NASDAQ moves plenty for me to trade it and not have to trade anything else. So, the pattern is the opposite of my trade. That's my secret. Imagine if you just took trades whatever I want to do. All right, I'm thinking of going long. All right, I'm just going to go short because you just go the opposite of what you originally wanted to do. Yeah. Some days markets favor other assets for sure. And it's and that's the part of discipline. If you trade the same asset, if I trade NQ every single day, if I have to know when to play defense, when the price action just isn't giving me anything, that's when I take a step back and I just play defense. I don't have to trade on every single day necessarily, right? I can go a day without taking a trade. There's no big deal. And then we'll see. Maybe tomorrow is going to have better price action, or, it just depends on the person's strategy. That's the thing is price action, one person can say this price action is shitty because their strategy is just like, they're not getting set up. This is shitty price action. For another trader, it may be the best price action they've ever seen for their strategy. So it's... Yo, what's up? Hello, hello. Oh, I think I gotta go. No, this isn't gold. This is NASDAQ, NQ. Can you take a look at gold and review the past 2-hour chart? I mean, I don't know how, like, I don't trade gold. So it's very difficult for me to analyze something I don't really trade. Because I don't know, I don't know how it moves, right? Like NASDAQ, I know how it moves. So I can analyze NASDAQ pretty easily. But like gold and other assets, they may move completely different than NASDAQ. Like something that can apply to NASDAQ may not necessarily apply to gold. But people use like gold, people use the dollar as like there's certain assets that move the opposite, right? Like if the market is pumping, then another asset is dumping. So they'll look at the confluences on the other asset, and if the other asset starts pumping, they know that this one can start dumping. Some people use the VIX, the volatility index, as a I personally just stay based off price action. I just look at the charts, analyze price action, see what it's doing, and take trades off of that. Gold is about to outpour. It isn't like when gold is doing good, doesn't that mean like, isn't that bad for the dollar? Typically, like when the dollar, you can double check, don't quote me on this, but I think typically like when the dollar goes down, gold goes up. So like gold shooting up, typically the dollar is going down. Because people use gold as a hedge, right? Against the dollar. Silver is going crazy. Yeah, I heard silver is like absolutely... It's like these silver, gold, a lot of people, like, it's a very stable thing. Like, right, gold will never lose its value. Gold will always have value. But when people are, typically when a lot of investors are scared about the dollar, they start investing into gold because it's just a safer thing to invest in. Especially like the dollar. I mean, it's like inflation, this, that, right? They're printing more money, and every time they print money, the value, like, the value goes down. It's just like, and people get scared, and people start investing into gold, and gold starts ripping, the dollar starts going down. Is gold really at all-time highs right now? I'll look at, holy crap, the gold is, wait. Holy, yeah, gold is ripping all-time highs. Wow. Gold is up, holy crap. Gold is up 72% in the past year. That's wild. What about the past month? Gold is up 10% in the past month. Alright, what about silver? Look at silver. So silver's probably hitting all-time highs too. I need to... Yes. Oh my god. Silver's hitting all-time highs too. Silver is up 150% in the past year. Golly. Damn, that's crazy. My brother has a lot of silver, but he has actual silver, not like future silver. I mean, technically you do have like future, technically it is silver that you actually, there's a way futures works where like, is it futures? Like you can act like people that trade oil, like you could get oil actually delivered to your door. Like when you trade futures. Like there's a way of like actually getting the... Dollar is weak. Yeah, it's... Which is not really good. That, like, if you look at it from one point, the fact that gold is going up is not really good for us. It's like, because that means the dollar is going down. I would rather have the dollar go up and, you know, gold go down. Alright, what time is it? Dang. Alright, I'm definitely getting off by 12 o'clock. I've already been... Yeah, exactly. It is a perfect hedge. Like, people that invest in the markets and in the dollar and this and that, like, gold is the perfect hedge. Are you what? Are you you say constipated? 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 I'm not constipated. I drink coffee. I don't know what constipates are. What are constipates? You're smarter than me. I don't know. Constipate. What is constipates? Constipates. Are you sure that's a word? When I type in constipates, I get being constipated. Common causes of constipation. Constipation occurs when bowel movements become less frequent and become difficult to pass. It happens due to changes in diet and routine. Oh, it's going to go up. Talking about like being bullish? Derived from constipation? What? Did you take that short earlier? Which one? This? No, this one? No, I didn't. I'm like more hesitant. The fact that we're like past 11 o'clock, I'm like very, like look at how price is moving. It's just like I would rather stay out of it than give back money. I just feel like trading this like very low volume is gonna just like get me stuck in a position. I think taking 2 trades in a day is pretty good. I really don't need more than that. Constipation. Consolidation. Consolidation equals constipation. When you're consolidated, your bowels have consolidated in a certain area. There is no bullish momentum in your bowels. Therefore, your bowels become constipated. No movement. Oh, does it really come from that? Okay, that makes sense. So your bowels have consolidated. They're in a consolidation phase, which is not good, right? Even as a trader, you don't want to be in a consolidation phase. Same thing with your bowels. You don't want consolidation in your bowels. I got it. It took me a little time. But I got it. It clicked. I'm gonna start using that. If I ever have constipation and I need to go to the doctor, I'm not gonna say constipation. I'm gonna say my bowels have consolidated in the what is it called? The freaking A. Dang it. My bowels have consolidated in the transverse colon. They have not yet descended into the descending colon. I'm gonna use that. What? Gold pumping, every other asset dumping. Well, the market's pretty, the market's kind of, let's see on an hourly chart what's going on. Market's not bad. The market's uptrending. Look, we've been on an uptrend ever since December 19th. We pushed above that 200, and now we're just like, we're on an uptrend above the 200. Slowly uptrending, slowly. So market's going up. We're in a bullish market. All right, what time is it? I gotta go eat. The only thing I had today was a neuro gum, but that stuff actually does in the morning. I don't know how good it is for you, but in the morning when I'm driving to the office, I pop a neuro gum, right? It, like, gets me like going. It gets me going. Oh, you just meant today? Alright. I was supposed to get off like 30 minutes ago, but... Well, tomorrow market's closed. We're gonna... I mean Monday. So... Alright. I will, oh, crap. What the heck? Where am I... Oh, crypto? Yeah. Crypto's still open. Alright, I'm gonna hop off. I'm gonna call it a day, call it a weekend, and then come back Monday, and we'll see what price gives us Monday. I'll be back for market open on Monday. Good time to walk away. Enjoy your weekend. Stay safe, and I'll see you guys Monday. Peace out.